What if I told you that right now, in plain sight, one of the biggest used car retailers in America, CarMax, is slashing prices by as much as 20%? That's not just a markdown, that's thousands of dollars wiped off the sticker price of vehicles that just a year ago were being fought over at insane markups. Think about that for a second. SUVs, trucks, sedans, and even hybrids that buyers were paying premiums for in 2022 are suddenly sitting unwanted on CarMax lots, and dealers are practically begging people to take them away. But why would a giant like CarMax, a company that prides itself on holding firm to pricing and inventory control, suddenly make such a drastic move? And more importantly, how can you use this rare window of opportunity to secure the kind of deal that might not come again for years? To really understand what's happening, we need to rewind and look at the bigger picture. Over the past 3 years, the used car market has been a roller coaster. During the pandemic, when new car production froze, used vehicles skyrocketed in value. CarMax, along with nearly every dealer in the country, could mark up vehicles by 30%, 40%, even 50%, and people still lined up to buy them. Trucks with 80,000 miles were selling for the price of brand new ones. Compact sedans that were once the budget-friendly option suddenly cost as much as a crossover, and hybrid and electric vehicles saw price tags that shocked even seasoned buyers. But markets always correct themselves, and now that correction has hit like a hammer. CarMax isn't cutting prices out of generosity, they're doing it out of desperation. Inventories are ballooning. Higher interest rates have crushed demand because suddenly financing that $25,000 used car comes with monthly payments that look more like a luxury mortgage than a practical purchase. At the same time, new car manufacturers are piling on heavy incentives, cash rebates, dealer discounts, and ultra-low financing offers that make buying new more attractive than used in some cases. The result? Cars that once flew off CarMax's lots are now gathering dust, and the only way out is to cut deep. This is where it gets interesting for you, the buyer. Because while the headlines scream about economic uncertainty and dealerships losing billions, this could actually be one of the most powerful moments in years for smart, prepared shoppers to swoop in and take advantage. Imagine shaving thousands off a late-model Toyota Camry, Ford F-150, or Honda CR-V, negotiating from a position of strength because dealers must move these vehicles before they lose even more value. And unlike the frenzied, overpriced market of 2021 and 2022, today the leverage has shifted. For the first time in years, you're holding the cards. But here's the catch, and this is where most people will miss out. Just because prices are dropping doesn't mean every deal is automatically good. In fact, dealers like CarMax are masters at making a discount look more attractive than it really is. A 20% price cut sounds amazing, but if that vehicle was already overpriced to begin with, you might still be overpaying. This is why it's critical to not only know which vehicles are actually a bargain right now, but also how to stack the odds in your favor, whether that means timing your purchase, understanding the financing traps, or recognizing which models are depreciating fastest so you can strike before the next wave of markdowns hits. And that's exactly what we're going to break down. First, we'll dive into which types of cars are seeing the sharpest price cuts at CarMax and why, because not every category is being slashed equally. SUVs and pickup trucks, for example, are feeling the biggest pressure, but compact sedans and hybrids? Their story is very different. Then we'll talk about the hidden forces driving this shift, from rising repossessions to the flood of leased vehicles coming back onto the market. And finally, I'll give you a step-by-step strategy you can use to approach CarMax or any dealer in this environment and walk away with a deal that makes sense for you, not just for the dealership's bottom line. So let's start by looking at where these price drops are most dramatic. If you've been watching the truck market, you know full-size pickups like the Ford F-150, Chevrolet Silverado, and Ram 1500 were untouchable during the pandemic. Prices soared to record levels, and used models often sold for more than new ones. But now the tide has turned in a way few saw coming. Those same trucks that were once commanding premiums are sitting unsold, lined up row after row on CarMax lots across the country. Dealers can't move them fast enough because the very buyers who used to stretch their budgets to own an F-150 or Silverado are now walking away. Why? Because monthly payments on a $45,000 used pickup, when you factor in today's interest rates, are just not sustainable for the average household. Combine that with higher insurance costs, pricier fuel, and the looming fear of layoffs or economic slowdown, and suddenly trucks have gone from status symbol to financial burden. CarMax knows this, and that's why their biggest cuts are showing up in the truck segment. In some regions, we're seeing late-model F-150s discounted by $8,000 to $10,000 compared to last year's prices. Silverado and Sierra models are following the same pattern, and Ram 1000s and 5s are not far behind. This isn't a seasonal sale, this is a structural reset of values, and if you've been eyeing a truck, this might be the most leverage you'll have in over a decade. But trucks aren't the only story. SUVs, the darlings of American driveways, are also feeling the squeeze. CarMax built its empire on stocking family-friendly crossovers like the Toyota RAV4, Honda CR-V, Nissan Rogue, and Ford Escape. For years, these vehicles sold instantly because families needed the space and versatility, and they were willing to pay a premium. But today, buyers are hesitating because the math no longer works. With higher borrowing costs and brand new models often coming with incentives that shrink the price gap, used compact SUVs are losing their edge. That's why you're seeing 10 to 20% markdowns on RAV4s and Rogues at CarMax, prices that would have been unthinkable even 2 years ago. Here's the part that most shoppers don't realize, though. Not every category is seeing these same deep cuts. Hybrids and EVs, for example, are still holding stronger than gas-powered models. Why? Because demand for fuel efficiency hasn't gone away, and with gas prices creeping upward again, buyers still see value in vehicles like the Toyota Prius, Honda Accord Hybrid, or Tesla Model 3. Yes, prices are softening compared to last year, but don't expect a fire sale on electrified vehicles, at least not yet. So, if you're in the market, the real bargains are sitting in the full-size truck and SUV categories. But how do you make sure you're not getting tricked by phantom discounts that only look good on paper? This is where strategy comes in. The first step is to research historical pricing trends for the specific model you want. Websites that track used car prices, auction results, or even just a quick scan of listings across multiple platforms can give you a baseline. If CarMax is offering 20% off, but that vehicle is still $3,000 higher than what other dealers are charging, then it's not truly a deal, it's a trap. Second, understand the timing. CarMax, like every dealer, has end-of-quarter and end-of-year pressure points. They need to clear inventory to balance their books, and that's when the best deals often surface. If you can afford to wait a few weeks or even days, you might squeeze an additional discount that casual shoppers won't get. Third, don't ignore financing. This is where many buyers lose thousands without realizing it. CarMax will often present financing packages that look convenient but come with higher interest rates than what your bank or credit union could offer. Always secure outside financing options before you walk onto the lot, because that gives you negotiating power and keeps the dealer honest. And here's where things get even more tactical: trade-ins. Right now, trade-in values have dropped significantly, which means CarMax is going to lowball you if you bring your car in. The smarter move? Get multiple quotes from places like Carvana, Vroom, or even your local dealer before heading to CarMax. Having those offers in hand puts you in control, and sometimes you'll find that selling your old car outright and then buying from CarMax separately saves you thousands compared to doing it all in one transaction. But even with all these strategies, the biggest mistake you can make is assuming that CarMax is your only option. Yes, they're the headline grabber because of their size and visibility, but these same market forces are hitting every dealer in the country. Smaller independent lots, franchise dealerships, and even online platforms are being squeezed just as hard. Which means if CarMax is slashing by 20%, you can bet there are other dealers willing to go even further to earn your business. The difference is they're not advertising it as loudly. That's why the smartest buyers right now are casting a wide net, comparing deals across multiple platforms and playing dealers against each other. Because competition between dealers is your secret weapon in this environment. CarMax might be making headlines with their across-the-board 20% cuts, but behind the scenes, local dealers are often more desperate. They don't have the national brand recognition or the massive advertising budget that CarMax does, so the only way they can compete is by quietly slashing prices even deeper. I've seen cases where the same model, same year, same mileage is listed at CarMax for thousands more than what a motivated franchise dealer is asking down the road. And when you point out those differences while negotiating, suddenly the best price at CarMax isn't so firm anymore. But let's zoom out for a moment because these price drops aren't happening in a vacuum. There are larger forces at play that are shaping this market correction, and understanding them will help you predict what comes next. One of the biggest is the wave of repossessions hitting the used car market right now. During the pandemic, lenders were more lenient, stimulus checks padded wallets, and many buyers overextended themselves on cars they couldn't really afford. Fast forward to today, and with inflation biting and wages not keeping pace, defaults are rising. That means more vehicles are being repossessed and dumped back into the wholesale auction market, flooding the supply pipeline that CarMax and other dealers rely on. When supply spikes like this, prices have nowhere to go but down. Another force? Lease returns. Remember all those vehicles leased in 2020 and 2021 when inventory was scarce and people were desperate to lock something in? Those leases are now expiring, and a tidal wave of 3-year-old vehicles is coming back onto dealer lots. Normally, those cars would be absorbed pretty easily, but with new car incentives tempting buyers and high interest rates keeping demand suppressed, it's creating a perfect storm of oversupply. Dealers like CarMax simply don't have enough buyers to match the incoming stock, so they're forced to cut again. And then there's the psychological factor, buyer hesitation. Shoppers today are far more cautious than they were just a year ago. Many are sitting on the sidelines waiting to see if prices drop even further or if a recession will bring even bigger discounts. This hesitation creates a feedback loop. Dealers drop prices to spark urgency, but buyers hesitate again, hoping the cuts will go deeper. It's a standoff, and right now time is on the side of the buyer, not the seller. Now here's the empowering part. When you understand these forces, you stop reacting to headlines and start planning strategically. For example, if repossessions continue to rise into the next quarter and lease returns keep pouring in, it's likely we'll see another round of price cuts before the year is out. That means if you're not in a rush, waiting a bit longer could yield even bigger savings. On the other hand, if you've already found the car you want and the numbers make sense, this could be the sweet spot to strike, before inventory clears and the best units are gone. And this is where the research comes full circle. Because remember, the dealers are counting on your lack of information. They're hoping you'll see 20% off and jump without realizing that the exact same car might drop another 5 to 10% in a few weeks, or that another dealer already has it priced lower. The buyers who win in this market are the ones who compare relentlessly, track trends, and stay patient enough to walk away when the deal isn't right. So as we dive deeper, let's talk about which specific models are shaping up to be the biggest steals at CarMax right now, and why certain brands are collapsing in value faster than others. Because if you're a savvy shopper, you don't just want a discount, you want to target the vehicles that are falling hardest, giving you maximum leverage at the negotiating table. And right now, a few surprising names are topping that list. Names that just a short while ago were considered nearly bulletproof in the used car market. Let's start with Nissan. For years, models like the Altima, Rogue, and Pathfinder held steady because they offered affordability and reliability. But now, these vehicles are among the hardest hit. Why? Because oversupply has crushed their resale value. Nissan overproduced during the last cycle, and now the used market is flooded with them. At CarMax, I've seen Rogues discounted well into double digits, sometimes dropping below the $15,000 mark for models that were closer to $20,000 not long ago. If you're a buyer who doesn't care about brand prestige and just wants a dependable daily driver, these vehicles are a goldmine right now. Another brand that's seeing dramatic markdowns is Ford, specifically with SUVs like the Explorer and Edge. During the height of the market, Explorers were fetching record-high prices because families wanted that third-row flexibility. But as new incentives rolled in and buyers backed off, those values have collapsed. CarMax is shaving thousands off used Explorers in order to move them. And the Edge, it's been caught in the middle. Too expensive for budget buyers, not premium enough for luxury shoppers. That means lots of unsold inventory and desperate price cuts to match. But here's the shocker. Luxury brands aren't immune either. BMW, Mercedes-Benz, Audi, names that usually hold strong because of aspirational demand, are starting to show cracks. CarMax knows these cars are expensive to maintain, and in an economy where people are tightening budgets, shoppers are far less willing to gamble on luxury vehicles that could come with a $2,000 repair bill out of nowhere. I've seen 3 Series BMWs discounted by over 15%, and even mid-tier Mercedes SUVs cut by 20%. That's unheard of, and it speaks volumes about just how widespread this market correction is. Now, while those brands are collapsing fastest, there are also the steady players, the ones holding value better than most. Toyota and Honda, unsurprisingly, are still strong. The Corolla, Civic, Camry, and CR-V aren't seeing fire sale prices the way Nissans or Fords are. CarMax might trim a few thousand, but demand is still there. These are the cars that families trust, and even in downturns, reliability is king. That doesn't mean you can't get a deal on them, but it does mean you won't see the same 20% plunge as with other brands. So, if you're looking for the sweet spot, you want to aim for vehicles in that high markdown, low demand zone, cars and SUVs that were overproduced, overhyped, or simply misaligned with what buyers want right now. That's where the deepest cuts are hiding. And here's the strategy. Don't just shop with your heart, shop with the numbers. If you've been dreaming of a Toyota RAV4, sure, you'll save money compared to last year, but if your real goal is maximizing value, maybe that deeply discounted Nissan Rogue makes more sense. Or maybe the overlooked Ford Edge gives you 90% of what a luxury SUV offers at half the cost after markdowns. But this leads us to another crucial question. How do you actually verify if the deal you're seeing is as good as it looks? Because CarMax is still a business, they're not going to advertise "we're desperate" on their website. They'll frame these markdowns as limited-time opportunities or hot deals to create urgency. That's why you, as the buyer, need to use every tool available, pricing apps, auction trackers, local dealer comparisons, to peel back the curtain. And when you walk into CarMax armed with data, that's when the conversation flips in your favor. And yet, here's the twist. Even if you're ready to buy, knowing when to hold back might save you even more. Because analysts are warning that if the repossession wave intensifies, if interest rates stay elevated, and if new car incentives remain aggressive, we could be staring at another round of price drops before the end of the year. Which means the deal of the decade at CarMax today might look like just the starting point 6 months from now. So as we move forward, let's break down the timeline. What's likely to happen in the used car market over the next 90 days, 6 months, and beyond, so you can decide whether to strike now or wait for the next big dip, because timing could be the single most important factor in how much money you save. Let's start with the short term, the next 90 days. This is when CarMax and other dealers are under the heaviest pressure to clear out aging inventory. Remember, every day a vehicle sits unsold on a lot, it costs the dealer money, financing fees, insurance, depreciation. Cars aren't just sitting pretty under the sun, they're losing value by the hour. That's why the next 3 months are primed for some of the most aggressive markdowns, especially on trucks and SUVs that dealers are desperate to unload before winter. Looking ahead to 6 months, things get even more interesting. By then, we'll likely see the full effect of lease returns flooding the market. Those 3-year leases signed during the shortage years will keep coming back, and that's going to swell inventory even further. Add in a possible wave of repossessions continuing to spike, and you've got a market that could be oversaturated well into next spring. For buyers, that could mean another dip in prices, particularly on models that are already struggling, like midsize SUVs and domestic sedans. Now stretch the timeline out beyond 6 months, and this is where uncertainty comes into play. If the economy stabilizes, if interest rates begin to ease, or if automakers slow down new production, used car prices could level off.